Got to say, today's deep dive, it's really going to kind of change how you think about those late night Google searches.
Yeah, those rabbit holes.
Exactly. So you sent us this master's thesis, right? By Jagoda. And the title is Measuring Investor Attention Through the Agency of Search Frequency in Google SE. Search Volume Index, SVI.
Catchy.
Yeah, it's a mouthful.
Yeah.
Jagoda submitted this back in August of 2022.
Okay.
And it's pretty fascinating.
Well, and it's fascinating because Jagoda's really looking at investor attention in a whole new way.
Right.
Not the kind of traditional financial analysis,
Right.
but through something we all use, Google searches.
So Google search trends
Uh-huh.
to get a read on the stock market.
That's the idea. What people are searching for on Google.
Okay.
That can really directly indicate their interest in stocks.
Okay. So if I'm suddenly curious about a company,
Yeah.
first thing I do, I Google it.
Exactly. You Google it, and Jagoda uses something called the Google Search Volume Index, or SVI, to track how often people are searching for those terms, like company ticker symbols.
So a high SVI means lots of people are Googling that stock.
Yeah.
Because they're thinking about buying it.
Potentially, yeah. And to make the analysis even more robust,
Okay.
Jagoda used a standardized version of SVI called ASVI, Abnormal SVI.
All right.
And that helps compare search trends across different periods and for all these different companies.
Okay.
And importantly, Jagoda focused on ASVI to gauge
Okay.
retail investor attention.
So like the average Joe.
Exactly, yeah. The everyday
Let's
investor.
say not the big institutions.
Right, right.
Got it.
Yeah,
So the big question, though,
yeah.
can this ASVI actually predict how stock prices will move?
Well, that's exactly what Jagoda wanted to know.
Yeah.
Does a spike in searches for a company's ticker symbol,
Mm-hmm.
does it lead to a short-term jump in price? Or even a longer-term reversal?
Interesting.
Yeah, are there these predictable patterns?
Right.
And it sounds like Jagoda didn't just look at any random companies.
Right. She used the MSCI World Index, didn't she?
You got it. And that's significant because it tracks over 1,500 companies from 23 developed countries.
Oh, wow.
So it gives us a much more global perspective
Okay.
than just focusing on the U.S. stock market.
Yeah, much broader.
Yeah, so Jagoda's research has a wider scope.
Right.
It might uncover insights that are relevant to a lot more investors.
That makes the findings more applicable for our listeners, right?
Precisely.
Perfect.
However, like with most research,
Yeah.
Jagoda did face some challenges.
Okay.
One of the biggest. Data limitations.
Oh, okay.
Yeah, she had to exclude some companies
I see.
because of missing or inconsistent financial data.
I mean, yeah, that makes sense.
Yeah,
Data availability would be a hurdle with a data set this big.
right.
So I guess that means her findings are preliminary.
Yeah,
The starting point.
absolutely.
Yeah.
But it highlights the need for more comprehensive data.
Yeah, yeah.
Imagine the insights we could unlock.
Right.
But even with the limitations, there are some really compelling findings here.
Like what? Give me the juicy details.
Well, one of the most interesting is that illiquidity.
Okay.
How difficult it is to buy or sell a particular stock
Right.
that actually played a bigger role in predicting returns than ASVI itself.
So wait a minute. The ease or difficulty of trading a stock
Yeah,
mattered more than how many people were searching for it on Google.
that's what Jagoda found, yeah.
Okay. Unpack that for me a little bit.
Okay, so think of it this way. A stock that's really hard to trade,
Mm.
it might see bigger price swings.
Okay.
So if demand suddenly surges,
Yeah.
maybe because of a spike in those Google searches,
Right.
but there aren't enough sellers,
Uh-huh.
the price could just shoot up.
Oh, okay.
Yeah.
Like a limited edition item.
Exactly. Scarcity drives up the price.
But those price swings could be risky too.
Right.
Yeah. What if there aren't enough buyers when you want to sell?
Exactly. There's inherent risk there.
Got it.
And Jagoda also found another really interesting relationship. Okay.
This time between ASVI and momentum.
So remind me what momentum is in this context.
Momentum.
Yeah.
It's the tendency for stocks that have been doing well
Mm-hmm.
to continue doing well.
Okay.
Think of it like a snowball rolling downhill.
Okay. Yeah.
It picks up speed and size as it goes.
So stocks with strong momentum tend to keep rising.
That's the idea, yeah.
Okay. Got it.
So what Jagoda found
Yeah.
was that there's this inverse relationship between ASVI and momentum.
Wait. So a stock with a high ASVI,
Mm-hmm.
lots of attention on Google,
Yeah.
could have lower momentum.
Yeah, it's kind of counterintuitive.
I mean, I would think the more popular the stock,
Right.
the more likely it is to keep going up.
You'd think so, wouldn't you?
Yeah.
But Jagoda's thesis doesn't really offer a definitive answer there.
Mm.
it's possible that by the time a stock is generating a lot of buzz online, it's already peaked.
Okay.
Maybe the people who got in early, before it was on everybody's radar, they've already bought in, the price has gone up.
And now it's the latecomers who are jumping on.
So maybe those Google searches are more of a lagging indicator.
That's a really interesting possibility.
This is making me rethink my Google search suggestions.
Right.
Seems like we're just scratching the surface here.
We are.
Oh.
And this brings us to one of the key takeaways from Jagoda's work.
Right.
This thesis doesn't give us a foolproof system for picking stocks.
Right.
But it does give us these valuable insights into investor behavior and how markets work. It encourages us to think critically about how seemingly unrelated information, like those Google searches, can really impact stock movements.
It's a new tool to add to the toolkit.
Absolutely. It's like getting a new lens to view the market through.
Okay.
We're not just considering a company's financials or the overall market, but we're tapping into the collective curiosity of everyday investors.
Okay.
And that's what makes this whole approach so fascinating.
I'm seeing Google searches in a whole new light now.
It's not just cold, hard numbers, right?
Yeah.
Human psychology plays a huge role.
You nailed it.
Yeah.
And Google searches, they offer us this unique window into that psychology.
Yeah.
It makes you wonder what other hidden patterns are out there just waiting to be discovered.
Now there's a thought to ponder.
Right.
I'm hooked. What else did Jagoda uncover?
Well, Jagoda's work, it actually kind of builds on some earlier research by these economists, Brad Barber and Terence Sodine.
Oh, yeah, I've heard those names. They do a lot of work on, like, behavioral finance.
Exactly.
Yeah.
How individual investors make decisions.
Right.
And they had this theory called the price pressure hypothesis.
Okay.
And they argued that when a stock gets a ton of attention, individual investors, they're more likely to buy it.
Yeah.
Even if the fundamentals, like, don't really justify the price increase.
So it's like a self-fulfilling prophecy.
Right.
The more attention it gets, the more people buy.
Yeah.
And the price goes up at least for a while. That's the idea.
Okay.
And so Jagoda wanted to see if ASVI, as this measure of investor attention, would it support this hypothesis?
Okay.
So those spikes in Google searches, would they really lead to those short-term price jumps?
And then maybe a reversal later on.
Exactly.
So can we just Google our way to quick profits then?
Well, not quite. Haha.
Okay.
Jagoda, she did find some correlation between ASVI and stock returns, but it was a small effect.
Okay.
And not always statistically significant.
So not a consistent pattern.
Not a reliable one, no.
So Googling random stocks.
Yeah.
Not going to replace actually doing your research.
It's not the magic bullet.
Right. Makes sense.
But it could be a piece of the puzzle.
Okay.
Right. It's most useful when you combine it with those other factors we talked about.
Right, like illiquidity and momentum.
Exactly.
It's like layering those different pieces of info.
Yeah.
To get a clearer picture.
Exactly. And it really challenges how we think about the market.
Right, because we're not just looking at the traditional data.
No.
We're looking at the behavior
Yeah.
of everyday investors.
It's a human element.
Right.
And that's what's so compelling about this.
Yeah.
It reminds us that markets aren't just driven by algorithms and cold, hard numbers.
Okay.
Human psychology is a huge factor.
Right.
And ASVI, it offers a way to tap into that.
Makes you wonder what other clues are hiding out there.
Yeah.
What if we could track like how ASVI changes around big events like product launches or earnings reports?
Oh, that's a fantastic point. Let's say a company is about to launch a hot new product.
Yeah.
Everyone's talking about it. We could track whether searches for their stock increase.
Leading up to it.
Yeah, in the days or weeks before.
Right. And if there's a big jump in ASVI, it could mean that retail investors are getting excited.
Exactly.
And that could lead to a price increase.
Potentially, yeah.
But of course, as we've been saying, it's not a guarantee.
Of course not, no.
And we can't ignore those other factors.
We got to factor in illiquidity, momentum, all of that.
Right.
But it gives us a real-time snapshot.
Yeah, of sentiment.
Exactly.
It's like getting a glimpse into the mind of the market.
The collective mind, yeah.
But it all comes back to having a balanced approach, right?
Right.
Using this ASVI along with that traditional analysis to paint a clearer picture.
I completely agree.
And timing is crucial, too.
Oh, absolutely, yeah.
Right. If you're too early, you might miss out on that initial jump.
Right.
And if you're too late,
you
could buy right before reversal.
You could get caught.
So you got to know when to act
That's where the skill comes in.
Right.
Experience, careful analysis, understanding the market context.
Right.
It's not just blindly following Google Trends.
No.
It's about understanding how they fit into the big picture.
It seems like this research opens up so many possibilities.
It really does, yeah.
What if we had algorithms?
Yeah.
That could process all this data, not just the financials,
right,
but the search trends, news sentiment, social media.
All of it, yeah.
To give us even more accurate insights.
It's an exciting thought, isn't it? I think that kind of analysis is, it's inevitable, really.
Yeah.
I mean, the amount of data we create online.
It's only growing.
It is. And as data science and machine learning get more sophisticated, we're going to find all sorts of new ways to use it.
Yeah.
For financial insights.
Right. Who knows? Maybe one day we'll have algorithms.
Yeah.
That can pinpoint exactly how much investor attention
right.
is driving a stock price.
It's kind of mind-blowing to think about.
It really is, that something as simple as a Google search could have this huge ripple effect.
On the financial world.
Right.
But it really does underscore the fact that even today, you know, with all this high-frequency trading and complex algorithms, human behavior, it's still this major driving force.
It is.
And that's really what Jagoda's research highlights.
Totally.
Yeah.
So for our listener, you know someone who's been with us on this deep dive. What's the key takeaway here?
I'd say never underestimate the value of information.
Okay.
Even if it comes from an unexpected place.
Right.
Stay curious, keep your eyes open, and never stop learning.
Yeah.
The more you understand how markets work, the better your investment decisions will be.
I couldn't agree more. It's a reminder that there's always more to learn.
Always.
New ways to see things.
Yeah.
And sometimes those insights are right in front of us.
Exactly. Maybe those late night Google searches. They're more valuable than you think.
This has been really eye-opening. I mean,
it has.
It's amazing how Google searches connect to the stock market.
It's a fascinating connection, isn't it?
It is. And, you know, it's made us think differently about investor behavior.
It really has.
And for our listeners, here's something to think about.
Okay.
If Google searches can reflect investor attention, what about other online behavior?
Like what?
I don't know, social media trends, online forums. Could those give us insights into market sentiment?
That's a great question to explore.
It's a whole world of data out there.
A world of possibilities.
Well said. Well, thanks for joining us on this deep dive.
My pleasure.
We'll catch you next time on the deep dive, where we explore the hidden depths of knowledge, one fascinating source at a time.